Good evening, everyone. All doing fine? So, we were up with a chapter of bank audit. So, I want to receive some replies to my good evening, only then I'll proceed further. Right? So, that I should know I'm not able to see you, you are able to watch me. I'm not able to see you, so I should know. So, I'm waiting for some good evening replies. Only after then I will start. Get replies from you people. I think the best question is, have you downloaded the PPT? Have you downloaded the notes? Have you got them? I'm sure now much replies, many more replies are going to come. So, we are up with a chapter of bank audit. As I told you in your previous class that we have done chapters till company audit reports. Now, this is the chapter where you apply the knowledge gained during all those previous chapters into the chapter of your bank audit. Right? Bank audit is a very interesting sphere. The people who are, yes, that is it. So many good evening replies. Good evening, sir. Akshay, that sir was really long. Okay. So, the chapter of bank audit, right? The bank audit is a sphere that many articles, assistants, and even we as chartered accountants, we usually wait for the period when we have to go for bank audits. So, it is a completely different sphere, but as we have learnt the basics of audit, we have read the basics of audit, it is very easy to apply those basics during our bank audits, right? The material we have studied, whatever topics we have studied till now, these were the basics of banking, right? And to start with, how do we conduct bank audit, right? That was the most important question which we had done in our last class, that how should an auditor proceed towards conducting a bank audit. Now, what we are going to do today is the heart and soul of bank audit. The advances, right? The loans. What are banks for? They are done that banks have two main functions. They accept deposits and they give loans, right? Loans and advances. So that particular main function, the loans, for a common person, a layman like me, if I have taken a loan from the bank, I am its borrower and the bank is the lender. For me, that particular borrowing, that loan is a liability. But for the bank, it is an asset. How is it an asset? Because as per the definition of asset, it is going to generate future economic benefits for the bank in the form of interest. Right? Okay. Thank you, Payal, for telling me that you have downloaded the PPT. Right. So, I can avoid many more questions related. So, where are we? Yes. So, that particular borrowing, that particular loan is an asset for the bank. So you can understand that in the balance sheet of the bank, on the asset side, you will see many of the loans. The deposits, I have an FD with the bank, I have an RD with the bank, I have a savings account or current account with the bank. Those are my assets. The bank owes me them, those balances, because I have invested in the bank. I have deposited that money in the bank to get some return in the form of interest. So that is bank's liabilities towards me. That bank owes me that particular amount and it is my asset. So there are two things. The deposits, the FDs, the savings current account balances, we say CASA. In general terms, the current account savings accounts are known as CASA. If you meet some banking person, he'll tell you what CASA is, what CASA means for them. Right? So that particular accounts, the deposits and all that stuff, that is on the liabilities side of the bank, right? And loans, which are liabilities for us, they are the bank's assets. So this is the most important part of any bank, the assets, because this is that part which is the core income generating field, the core income generating head for the bank. To understand the advances, to understand how you audit them, we need to start from the scratch. And I must tell you that bank audit is really vast, okay? And in the interest syllabus, as I told you, this has just been introduced in the new syllabus. So I'll request you all to just enjoy this chapter, just understand the basics, okay? Don't go too far into the syllabus, because you will be getting to read, to learn, to know about insights, in depths of bank audit in your CA final syllabus. What is LAFAR? What is the stat audit report? How are these things audited? Each and everything is there, a complete package in your CA final syllabus audit, bank audit, right? So here in the interest syllabus, we have to just build our base. We have to understand the core concepts. It is a lighter version or an easier version in CA Inter of the bank audit. Please take no pain. I can understand without pain there is no gain, but here you need not take any pain to understand the core concepts, because we are just understanding, we have to understand the basic concepts only, right? And it is given very beautifully in your study module. Although you have my presentation as well, it collaborates with the study module, and we have some practice questions as well, which we'll be doing up today, right? So let us start with our second lecture on bank audit. I'm going to share my presentation with you. Okay, we did what has been done till now, right? Then need of bank audit, we have done types of banks in India. RBI, we read about RBI. The regulatory framework, I told you this is also an important question. What are the acts applicable to banking industries? The regulatory framework for banks. Then distinct features of the banking industry, accounting system, right? The audit approach. We read about audit planning, how to plan a bank audit, then appropriate controls at the bank, engagement team discussions, which I told you is very interesting on your part, because you are going to be part of the engagement team. And then we had the bank auditor, his qualification, his remuneration, his powers, his appointment, eligibility, everything. Then the bank auditor's audit report. So the bank auditor's audit report, you just have a glimpse in CA Inter, right? In CA Final, you will get to know about it in detail. So all this audit plan, engagement team discussions, we did some practice questions. All the practice questions which I am making you do, which I am discussing with you, all have been taken from the institute's question bank. I showed you in the last class where is that particular question bank located on the ICAI's website, US knowledge portals, in the under the student section. We have all RTPs, MTPs, practice questions, case studies, previous year answers, and everything is available. It's complete e-library for you people. So whenever you are longing for some extra practice, please visit there, download material and practice it from there. Right? Okay. So we did about the bank audit. Yes, this was one of the main questions. The stages in conducting a bank audit. So these are the 18 stages while conducting a bank audit. Just 3 or 4 of them, I suppose 2 or 3 of them we had done in detail, as they could be asked as a separate question. Otherwise, all these 18 steps have been properly classified in your CA final syllabus, and you are going to read them again during your CA final, right? Then we have The bank audit reports, format, RBI reporting, we read about the frauds, right? Now, as I told you, the heart and soul of the banking industry, the advances, the loans, right? And then let us move further. We are going to learn the meaning of advances. We know it in general sense, let us go some technical and professional. What are the various types of advances? And believe me, it's very interesting. We are going to enjoy it. It's very interesting, very knowledgeable. The classification of advances. What is drawing power? This drawing power, there's a DP word. This two-letter word is really important in case of banks. Then how to disclose it in the balance sheet and how do you audit the advances. So, what are advances? We have it here. What are advances? I asked my mom, would you lend me some money? She would say, you are my child. Why do you need to ask for lending? Right? I can give you right away as it is. So, that is where there are relations involved out of natural love and affection. They are not advances, they are gifts. But here, as we have done that day, person A, person B, they are not going to lend money to, person A is not going to lend money to person B out of the fear of risk and insecurity. Then where comes the banks as a mediator? Person A deposits his money into the bank. Like person A, many other people deposit their money to the bank, and other persons like person B require money for their businesses and any other thing, building houses, anything. They ask for the money, they take the money, they take loan from the bank. Okay? So this is how the commercial cycle goes. You invest money, you save money, you channelize that money into the market, and people who require money, they use that money and use that money for investment. Okay, so what is an advance? An amount of money or credit, especially given as a loan. Simple. Udhar. The extension of money from a bank to another party with the agreement that the money will be prepaid. Advances, professional, or you can say technical definition from the point of view of banks, that it is extension. Extension means to give money. Extension, to extend. Like you say, extend a helping hand, extend money. Okay? To extend to the extension of money from bank to another party with the agreement that the money will be repaid. You have to return the money. It is not a gift. You have to return the money, and you have to return it along with interest. The interest is fixed periodically. You have to furnish the interest as per the periodic intervals. It is usually monthly. And you can get the money lump sum, or you can return the money in lump sum, or you can break it in installments. We all know about EMI, equated monthly installments. We'll come to its concept as well. Okay. Then, nearly all bank loans are made at interest. So, what are banks there for? They are not NGOs, right? They are there to do business. If they are giving you money, they are lending you money, they want something in return. And that, what is in return? Quid pro quo. Consideration. So the consideration I get is the loan, the money. And the consideration bank wants is the interest. So banks give loans for interest. Meaning, what meaning? The borrower has to pay a certain percentage. It could be flat basis, it is usually of reducing balance basis. As the balance reduces, the amount of interest also reduces. Right? Principal amount, and on principal amount you have to pay interest. Okay? A bank loan is occasionally called a bank advance. Advances generally consider, as I told you, the largest item on the asset side of the balance sheet and are a major source of income for the banks. Moving further, what do advances comprise of? Yes, Advances are basically of two types. Okay, we are not going towards the classification. Classification is something different. Advances are of two types: funded and non-funded. Yeah, I am asking money from a bank, and that money is called funds. How come non-funded? This is something which is very new. What is non-funded? Like I have asked for udhar from the bank. मुझे पैसा चाहिए और बिना पैसे के कौन सा लोन है? What kind of loan is this where there is no fund involved? This is something new. So let us first do what is a funded advance. A funded loan is a loan where there is an actual transfer of funds from the bank, the borrower. Okay, and examples will definitely do. What are term loans? Let me tell you: cash credits, overdrafts, demand loans, and bills discounted and purchased, balances in deposit accounts, participation on risk sharing basis, interest bearing staff loans. Okay, so let us first do what is a term loan. A term loan basically derives its meaning from the word term. What is term? A fixed term. 3 years, 4 years, 5 years, 6 years, 7, 8, and even a housing loans. Housing loans run 30 years, 35, 30 years, 20 years. A term loan is a loan which is taken for a fixed term, and by the end of that term, you have to return that money in installments along with interest. And that is known as, you can convert it into an EMI as well. I purchased a new car and I took a car loan. That is a term loan. Because I took a loan for 5 years. I took a loan for 7 years. So whatever loan I took from the bank, I borrowed money from the bank. I have to return that money evenly spread in a span of 7 years along with interest. That interest is extra payment. So what do I get? You all have read about time value of money, right? This is time value of money. So I get time, I can give the money installments. For that money which I am giving in installments, I have the risk, I have the benefit of time. I have divided it into different intervals. Here at 0 point of time, I have to return my money to the bank, right? And if I have to do it at different time intervals, so that is a benefit for me. For that benefit, I have to incur a cost, and that cost is interest, right? Cash credit. So term loan is clear. Term loan, the housing loans, the loans you take for housing, that is a term loan. The loans you take for business, usually for capital investment decisions, term loans are taken. Capital investment, you have to purchase machinery, you have to use the loan for constructing building, you have to use the loan for purchasing a vehicle, a commercial vehicle, right? You take the term loan for constructing your house, residential, constructing a residential complex. That is all term loan. Term loan derives its meaning from the word term. Now coming to cash credits, Varna, yes, we'll come to syndicated loans as well. I told you don't run, be with me. Okay? So cash credits, overdrafts and demand loans. So these are one and the same thing. Cash credits, I'll tell you what is cash credit. Cash credit, its meaning is taken from the term cash credit. We are given the credit of cash. So what is it like? You all understand about working capital. You must have read about operating cycle, the working capital cycle. So what is it? The working capital cycle is usually consists of the current assets and current liabilities. I need money to purchase raw material. I purchase the raw material, right? So here we go. This is my working capital cycle, or you can say operating cycle. I need raw material. From this raw material, I enter into production and produce goods. These goods I sell in the market, right? So here comes sales. These sales give me cash, and I use this cash to purchase raw material again. Okay? So what is it? I have raw material with me. Raw material, I produce goods. I sell them in the market. Cash is generated, and I give that cash, use that cash to again purchase raw material. Okay? So what's the big deal? The big deal is I need to have cash to purchase this raw material. I want to be an entrepreneur. I have very interesting ideas to start my business with, right? But I'm short of cash. So what do? I visit the bank. I ask it for a loan. The bank would say it would look into my financial credibility. It would look into my net worth. It would look into my financial history, and it will ask me that for what purpose do you need? If I need I need a loan for constructing my building, my factory, machinery. They will say ask for a term loan. But I would say I need money for my day-to-day working. I have not got that much of money. My capital is not that enough, which I have with me to complete this cycle. Right? I ask them, please lend me some money so that I can start this cycle as soon as the cash is generated. This cash is going to help me as well as help me in what? I can use this cash to purchase another raw material. For another cycle, I can use this cash to pay you back. So for this cash, here comes the bank. It gives me cash to purchase raw material. Right? This particular loan, type of loan, which the bank gives me for my daily routine business, for carrying out my daily works, daily chores in the business, like paying the creditors, paying salaries, paying all other recurring day-to-day business expenses. The bank gives me this loan. That is known as cash credit. We call it cash credit. The credit in the form of cash. What does it? How does the bank lend this? The bank opens an account in our firm's name. Okay, we all have understood the current account. Current account is an asset, right? So it is kind of CC. It is known as CC. It is known as CC limit. CC limit. What is the CC limit? The bank would say works on our financial credibility. It checks on how much will we be able to take the risk, to how much will be able to pay the money in time to the bank. The bank calculates all that, completes its working, and tells us that you are eligible for this limit. If I ask for just give me 10 lakhs, 50 lakhs, the bank says, let us adjust your financial credibility, and with that, we'll tell you whether you are eligible for 50 lakhs or not. It could say you are eligible for 35 lakhs only. It could say you are eligible for not for 50 lakhs. I could be eligible for 75 lakhs as well. Right? So, if I am eligible for 75 lakhs but I ask for 50 lakhs, the bank is happy to lend me 50 lakhs. Because it has got much to cover. Right? So, 50 lakhs, the bank sanctions me 50 lakhs of these. This is, I would say, so cash credit, the bank gives me 50 lakhs, let it be the limit. The bank has fixed this limit. Okay? Now, what does the bank do? The bank opens an account in my firm's name. And bank tells us that this is the account, you are being issued a checkbook. And you can make all sort of payments from this account. We have capped this account at rupees 50 lakhs. The maximum limit 50 lakh rakh di hai. We have capped it at rupees 50 lakhs. Right? So, it is upon me how much I want to withdraw at a certain point of time. I have to purchase raw material that requires 10 lakhs. So I'll withdraw 10 lakhs, although in installments or issuing checks to different vendors, sorry, suppliers, I can issue them checks from this account. So when I issue checks, as soon as I am issuing checks, this limit goes on decreasing. After 10 lakhs, 40 lakhs, this goes on decreasing till it reaches 0. That means I have used the maximum limit bank had given. Now I have to return some money to the bank so that this goes up. I can use it again. Once I extinguish all the whole limit, now I have to deposit some money into the bank to avail more of the limit. This limit is usually generally issued on an annual basis. After 1 year, you have to get it renewed. You can renew it at the same amount. You can renew it at an increased amount. You can renew it at a decreased amount. If you require more money and you are making profits, banks would be happy to increase this limit. You might be incurring losses, or you might be having saved too much capital for yourself, so you might yourself want to get this limit decreased. This is on an annual basis. You pay interest as and how much you use. If you have used 10 lakhs, you will pay interest on 10 lakhs. You will not going to pay interest on 50 lakhs. That is the sanctioned limit. That is the sanctioned limit. This limit has been sanctioned to you, and you have to use as much as you want till 50 lakhs. I might not use completely. In a year, I might use till 40 lakhs only. I might use the full 50 lakhs itself. So it depends upon my requirements. But the interest is on running basis. Interest is charged on running basis on this amount. Right? So this is what CC limit is. Then, but we ask, the bank gives it right away. Isn't there, the bank asks for some security? I visit the bank just checks my income tax returns and my balance sheet and say, yeah, you are doing very good business. We'll give loan to you. How much of population is there? Everybody is going to get this loan. The bank asks for security. The bank says, somehow, anyhow, you might incur losses. You might not be able to earn profits. Then where will we go? Whom would we catch? We need some security. We need some assurance that if you fail to return our money, we have some underlying asset with us which we can sell, and from the receipts of realization of which we can cover our risk or money. So usually the cash credit accounts, the security given, they are secured against the stock. So you use this limit basically to start your operating cycle, to purchase the stock. If you have to purchase the stock, the bank says, yes, there is line on your stock. The bank has line on the stock. What we do about this in the audit of advances, how that stock is calculated and how much the bank can take over our stock. So banks can take stock against this as collateral, or we convert the stock into finished product. We use this finished product for sales in the market, and we accumulate debtors. So debtors are known as book debts. The bank says if you are unable to return our money, we'll go into your shop, your godown will take over your stock. If you are not able to return our money, we are going to realize your debtors, your book debts. Your book debts will be ours. So whatever money is realized from the book debts, first we'll cover the expenses we incur to realize that money. Then we'll cover our money. We'll cover our money which is due from you. Then whatever is left, we'll give it to you. Right? So the CC limits, the cash credit limits, these are secured against the stock or the book debts. Right? What is overdraft? The basic difference between overdraft, I'll tell you later. Just basically overdraft, you all have read in bank reconciliation statements that when a current account, the bank gives a facility that you can use it the more than the money you have in it for a shorter period of time. When you use it in excess, then the limit allowed, this is known as overdraft. You have drafted overly. This is an overdraft account. When we come to audit of advances, we'll definitely tell you the difference between overdraft and cash flow. Okay? So let us move further. Okay. So here we were. Funded, cash credits, overdraft, demand loans, bills discounted and purchased. Right? Bills discounted and purchased, we know. We have written in bills of exchange. We have bills receivable with us. We are in dire need of money. We go to the bank. We ask the bank that please take this bill. And whatever its maturity date is, please go to that particular debtor and get realize money from him. Till the time we need money, if it is a 1,000 rupees bill, the banks charge 100 rupees interest, or we can say discount, and gives us 900. We are happy with that 900 time value of money. 1,000 we are going to get after 3 months. We are happy with 900 as of today because we are in need of money as on today. Bills in you can say bills discounted and bills purchased, balances in deposit accounts, examples of funded loan. Then participation in on risk sharing basis. So participation on risk sharing basis is when one bank takes the help of another bank to share the risk. This is also a funded advance. Then interest bearing staff loans, the staff, the employees working with the bank, their loans are also funded advances. Now coming to non-funded facilities. What are the non-funded facilities? Which do not involve transfer of funds. For example, letter of credit and bank guarantees. So I go to the bank and I ask it for a loan. The bank says that we don't know you. You provide us with some collateral. You provide us with some security on the basis of which we can give you the loan. I provide them with the security. And then there is an additional requirement, the guarantor. Please arrange a guarantor for yourself, a third person, so that in case you fail to repay our money, we can catch that particular guarantor. We can ask that. We can knock at the doorstep of that guarantor that you had guaranteed that this particular person will repay our amount. He has failed to do so. Now it is your liability. You have to pay us. Additional security. One security is with reference to the collateral which the principal borrower gave. Another security, double security with the presence of a guarantor. That is a bank guarantee. So the guarantor does not have to give money right away. If the principal borrower is returning its loan in installments, periodically, he is very much regular in making his payments. The guarantor is just there for a guarantee. The guarantor's liability arises only when the principal borrower fails to comply with his liability. You might have read it in the chapter of indemnity and guarantee in contracted. Then letters of credit. What is a letter of credit? LC, we call it LC. Usually this is seen in import-export. I've shown a figure over here, a picture over here. You can see that there is a buyer, there is a seller, there is advising bank of the seller, and there is issuing bank of the buyer. So what does the buyer? The buyer requires raw material, the buyer requires some trading material to trade in its country. It asks for a contract from the seller. The seller says, I don't know you. Or I might have done only 2 to 3 transactions with you. What is your guarantee that you will be paying me the money? Where can I come down to your country or your place and ask you for money? How much time is going to get wasted? So what does the buyer say? The buyer asks that I'll get you issued a guarantee from my bank. A letter of credit. I'll approach my bank. This is the letter of credit was the main underlying asset which led to that PNB scam, that jewelry scam by Nirav Modi. This letter of credit was the underlying asset. Many letter of credits were being issued by the bank. These letter of credits, non-funded. How were they so? how they became so dangerous for the bank that even without non-funded, no funds were involved, even then the bank had to incur such a big bad loan, NPAs that had to be written off from the bank's books. So how does it go? The buyer approaches his bank, asks his bank, you are my bank, I do business with you, so please issue a letter of credit on my behalf to the seller's bank, that in case if I fail to repay their money, you will repay money on my behalf and you will ask it from me. So in that case, owing to personal relations, owing to business which the buyer and seller, the buyer's bank do with each other, enter into each other, owing to the relations, the issuing bank issues a letter of credit. Although the letter of credit has much paperwork involved. So this letter of credit is issued to the seller's bank. The seller's bank receives this letter. It asks the seller that yes, we have received a letter from a bank from another country, belong to the same industry, banking industry. We have received a letter of credit from our banking brother, the bank from the buyer's country, that in case if the buyer fails to pay the money, the bank will pay us the money. So there is, the risk is covered, there is security of words, right? So in case the buyer has to pay the money, the buyer pays the money in time, that letter of credit is revoked. Revoke means cancelled, khatam kar di jati hai. If the buyer fails to pay the money to the seller approaches his bank approaches the buyer's bank. The buyer's bank approaches the buyer. Why are you not paying the money? You asked a letter of credit from us. Now where are you? Why are you not paying the money? The buyer shows his incompetency. The buyer's bank is forced to return that money to the seller's bank, and that is what happened in that PNB case. That is why so much losses were there. Now the bank approaches the buyer. Now we issued a letter of credit. There was a contract between us. Now you have to repay us the money. Now the bank is after it files a suit against the buyer that you have to return us the money. The seller is sorted, the seller's bank is sorted, but now it is between the buyer and his bank. So this is what letter of credit is, that you don't have to give funds right away. You just take some sort of guarantee, give some sort of guarantee so that when that particular event happens, which was the risky event, if that happens, that materializes, then you enter into the game, then you enter into the field, and then where it begins that your liability has been created. So that is what a non-funded advances are. Moving ahead, auditor is concerned, but auditor को क्या देखना पड़ता है? What are auditors concerned? He has to carry out substantial procedures that all large advances are at least covered. We have just test checking, sampling. All large advances are at least covered on sampling basis. There could be some problem accounts where there could be irregularities in payment of interest, in payment of EMIs, inappropriate amounts or not enough amounts or not being paid at all. There could be some problem accounts which need to be examined in detail. Sample checking, to what extent you have to do sample checking depends upon how effective the bank's internal controls. Then, what is a large advance? What is a large advance depends upon the volume of operations of the bank. The volume of operations of a branch, how big a bank branch is, kitna bada bank branch hai, how is it determined? It is determined on the basis of the amount of advances it is given. On the basis of loan it has sanctioned in the market. That tells you, that figure tells you how big a branch is. Okay? So an advance will be considered to be a large advance if the year-end balance is in excess of 2 crore or 5% of the aggregate. If a bank has 100 crore advance, it's right. So if more than 5%, 100 crores, 5 crores or 2 crores, whichever is less. So if a particular advance has year-end balance of 2 crores or more than that, then it is a large advance. Advances are sanctioned during the year, as we had done in the last class. RBI periodically inspects the banks, gives its inspection report, which we call it Rabia, and concurrent auditors reports, stock audit reports, internal inspection, the bank's zonal office. All these reports the auditor has to review and study carefully that if any adverse comments are there and what action has been taken against those adverse comments. Have they been rectified or not? Okay, coming to classification of advances. Sector wise, priority. Okay, let me take some. No, rather, it won't be covered under liabilities because it is kind of a loan which you give on behalf of your customer. So, customer does furnish you something as a collateral, right? It is a liability when it materializes, that particular risky event happens. Till then, it is an asset for you. Okay, non-funded asset, advance. Then, how do banks determine eligibility for giving cash credit? They see what business you are into, whether this business is going to give it, they see your experience. You have to submit documentation to them. This is what we are for, the chartered accountants. The customer visits us and we tell them that if you are opting for a cash credit, the bank tells them that we require this much documents. The financial documents, your net worth and all. On the basis of that, the bank determines their eligibility. Both documents are guarantee from bank. Palak, no. See, that letter of credit is a guarantee, a sort of guarantee from the bank. But that bank guarantee, that is something you can say which a third person gives to the bank. That is a bank guarantee. Right? Or you can even say bank guarantee, a third person can give it to bank. Or if bank gives guarantee for its customer. The letter of credit is something, it is completely a trading issue. Bank guarantee is something when bank takes your guarantee in some particular arrangement, agreement that if this person fails, will you. Bank guarantee is just signing off an agreement. Letter of credit is something, letter of credit is usually used with overseas trade. Priority sector wise, we have priority sector advances, non-priority sector, security wise, we have secured advances, we have unsecured advances. Then prudential norms wise, we have standard assets, we have NPAs. And that NPAs, this NPAs is a big thing for us. Let us move ahead. Priority sector. So RBI issues guidelines to the banks that we have released a list of priority sectors, the sectors which are of utmost priority for the development of the nation, development of the economy. And these sectors should be given, these areas, these businesses should be given priority over other businesses. So these are the priority sectors for our economy. These guidelines cover what rate of interest you should offer them, what could be the service charges, how are you going to sanction them, on what basis can you reject their loan application, how are you going to maintain the disbursement register. So what is disbursement? First you apply for the loan. Okay, then their credit worthiness is checked by the bank, then you are sanctioned the loan, sanction letter is issued to you. After sanction letter is issued to you, loan is disbursed to you. The next step is loan is disbursed. What is disbursement? When the loan amount is fed into your bank account. The loan account, the amount is fed into your loan account. Your loan account is opened and you can withdraw money from that particular account. That is known as disbursement and that is the last step. Issue of loan application acknowledgement, RBI also issues target for the banks that in a particular year, out of all your advances, you have to give this much percentage to priority sectors. This is your target. And that particular thing is known as out of all your advances, this particular limit, this particular percentage, you have to give it to your priority sector. So at currently, usually the banks have asked the RBI has asked the banks to maintain this percentage at least 40%. At least 40% of your loans should be given to the priority sector, right? So what constitutes the priority sector? Here we have this. What constitutes the priority sector? Agriculture, micro and small enterprises, the MSME, micro small enterprises. Then education loans, housing, home loans. Export credits, right? The export credit, we have in export credits, you read about packing credits, shipment credits, and the letter of credit and others. So this is priority sector lending. Security wise, yes, the banks ask for security. Banks, they are not going to give you loan just as it is. They ask for some security, they ask for some collateral. What is the collateral? Collateral is a security which you furnish to the bank so that in case of failure to return the money, to repay the money, the bank can sell the collateral and realize its money. This is what collateral is. The banks ask security or collateral while lending to assure that the borrower returns the money to the bank within the prescribed time. If fails, banks have legal authority to sell the collateral and get its money back. Whenever there is a loan application made, a loan agreement, a contract is made between the bank and the person, the borrower. So this is the whole set of papers which a borrower has to sign along with the bank, the guarantor has to sign. Right? This is all to create a legal authority to sell that particular collateral. So what could be offered as collateral? We could offer collateral, a property, a vehicle, jewelry, investments, anything which carries value and which the bank can realize to get its money. That is collateral, right? So security-wise, two types of loans, priority-wise, priority sector loans and non-priority sector loans. Security-wise, secured loans and unsecured loans. Secured loans where they ask for the security, they ask for furnishing a security. Unsecured loans are business loans. 3 lakhs, 4 lakhs, usually NBFCs do that, banks also do that, like this Mudra loans till 50,000 without any security. These are unsecured loans which are given under some special scheme or arrangement where you don't require any collateral. You just have to satisfy the bank with regard to your business proposal. Okay. So what are the kinds of security? How do you create security? So these are the kinds of securities. Mortgage, pledge, hypothecation, assignment, set off or live. 1, 2, 3, 4, 5, 6. I'm going to make you guys understand what does these terms mean. What do these terms mean? Okay. This particular topic has been covered very beautifully in your module. As it is short, crisp with examples, it is there. If you want to learn, you have to learn these terms and their meanings, their explanations. You can do it from the study module. I'm going to make you understand their difference, right? So first, we'll go to mortgage, hypothecation, and pledge. Mortgage, hypothecation, and pledge. Right? So, mortgage. Mortgage is always, priority loans are those loans which are issued to the priority sector. There is a list, it is there in the PPT, which are the priority sectors, and the banks are mandated by the RBI to give those loans to the priority sector. They have mandated it at 40%, that at 40% you have to give those loans to the priority sector. Out of all the loans issued during a year, all the loans granted during a year, at least 40% should have been given to the priority sector for the development and betterment of the nation. Okay? Mortgage. Mortgage, we have heard that mortgage is usually of first difference. Mortgage, a property kept as mortgage security is always immovable. Mortgage always belongs to immovable properties. Immovable properties, the land and building attached to the earth. So it could be your house, it could be your office, it could be any building, it could be a plot, it could be a godown. Usually banks don't take plots as mortgage. Constructed properties are usually taken as mortgage, right? So that particular purpose, a mortgage deed is framed. What is that mortgage deed? When you go to the bank to audit, when you audit mortgages, you examine this mortgage deed to understand what were the terms and conditions for this particular. Right? There is mortgage deed. Mortgage are of two types: registered mortgage and equitable mortgage. Right? You have in that with you registered mortgage and equitable mortgage. Okay? Equitable mortgage, registered mortgage is one which is registered with the authorities. You see, if you talk in some North Indian language, so there is your revenue department. Revenue department, you get it on the revenue department has a land records and you get a lion marked over there. You get a lion marked over there by the bank. The bank gets a lion marked on your property in the records, land records with the revenue department. Tehsil department like these. Okay. So the bank gets a lion mark that is known as registered. It gets registered. That is a registered mortgage. Equitable mortgage where not such mark of line mark is not done. This particular activity is not, procedure is not done. That is equitable mortgage. Then immovable property, right? Possession is with the borrower only. Possession is with the borrower only, while the bank gets a lion marked on what? What is lion? A right. Lion is a right. We'll do what is lion? A right over the legal owner of the property. Right over the legal owner of the property is lion. Okay? Possession is with the borrower only. Fourth, we'll do the example. Hypothecation. Hypothecation is done for movable properties. Hypothecation is done for movable properties. Pledge for movable properties. Okay, hypothecation and pledge both for movable properties. And what is the difference? There is basically an agreement of hypothecation. Hypothecation deed or hypothecation loan agreement. No such agreement over here in pledge, or it is just voluntary. The agreement is voluntary. Hypothecation. Possession is with the borrower. In the case of pledge, possession is with the lender. So mortgage, hypothecation and pledge. In case of pledge, the possession is with the lender. Legal ownership in case of mortgage with borrower. Here again, legal ownership with borrower. Subject to lion in both the cases. Legal ownership, there is no lion, there is nothing. Legal owner remains the borrower. If you want to write it down, you can write it down and just get a glass of water for me. Till that time, you can jot it down and then we'll come with both examples. Okay, Amar Jyoti Das, bill discounted and bill purchase we are going to cover in the next slides. Please be assured. I suppose you are writing it down, so accordingly, side by side, I'll explain it. Mortgage, immovable properties, mortgage deed is signed, possession is with the borrower only. Like what? House property. You have taken a home loan. You have taken a home loan for against your property. Right? So, when you take a home loan, the bank takes that particular property as collateral. The mortgage loan. The property for which you have taken the loan is the principal security. And sometimes the banks may even ask for some additional property. That additional, there is principal security and there is collateral security. For example, in the case of mortgage, the property for which you have taken the loan to construct or to purchase, that is the principal security. And the banks may ask for double coverage to cover them double for against the risk. They may ask for some additional security. We'll see examples of additional securities in the next slide. So that is known as collateral. The additional security is known as collateral. So we live in that house. We are living in that house. The bank doesn't come and locks the house. You cannot live. You have put it on mortgage. No. We enjoy the rights of that property. But in case, if we fail to repay the amount, the bank can ask us to vacate the property because now it will auction the property. It will auction the property and whatever money is realized from the auction, it will cover its auction expenses, its other expenses related to that auction, then its overdue money, the money due to the bank, and whatever left is given to us. So the example for mortgage is house property, home loans. Hypothecation. What is hypothecation? Hypothecation is for movable properties, right? Agreement. Agreement is signed. Loan agreement is signed. Possession is with the borrower. I enjoy the possession. Legal ownership is with me, but subject to lion by the bank. For example, the best example is car loan. The best example is car loan. Right? So this is home loan, car loan. Yeah, we could say commercial vehicle loan. You want to say purchase trucks, tractors. So if you see the registration certificate of the car, I haven't written anything at the bottom. Whatever is visible to you, that is the only thing. It is covered till here only. I haven't written anything at the bottom. Mr. Venkataraman, I haven't written anything at the bottom. I'm just covering it till the point I have written, right? That is visible, nothing below that. So, car loan. If you see the registration certificate, the RC of your car, if your car is purchased against a car loan, if you see the registration certificate of the car, it has that hypothecation mark on it. That the car is hypothecated with this particular bank. It is there on the registration certificate, the car's ownership papers. Okay? The commercial vehicles, if a transporter purchases trucks, 44 AE section income tax act, the transporter purchases trucks for his transportation business against loans. The trucks are hypothecated by the bank. The possession is with the borrower. He is enjoying the possession. He is using those assets for his business. But if he commits any default in repaying the money, the bank may take those assets from him, sell them and realize the money. Right? For pledge, we have jewelry, gold loans. Gold is movable. Voluntary agreement is completely upon us. The voluntary agreement. Possession is with the lender, the jeweler. The jeweler keeps the gold with him and lends us the money. When we return the money, is it fine now? Please do reply. Is it fine now? Everyone? Is it visible now? So, when we return the money to the jeweler, he gives us the jewelry back. So, the legal owner, I am the legal owner for as against the jewelry. But right now, who is possessing the jewelry? The jeweler. He can part away with it if I am not able to repay my money. So, pledge is for movable properties, right? So, hypothecation, pledge, mortgage. One or more, they are usually similar, but with some points. Like hypothecation and pledge, both are against movable properties. But when it comes with the possession, mortgage and hypothecation are almost similar. The possession is with the borrower. Okay, so this is the difference between mortgage, hypothecation and pledge. As I told you about the cash credit limits, the cash credit limits are usually given against the stocks as security. The stock, the inventory as security. So can you tell me under which category would it fall? The cash credit limit sanctioned against the inventory, the stock. Under which category would it fall? Mortgage, hypothecation or pledge? I want quick answers, please. Mortgage, hypothecation or pledge? Okay, Amarjyoti, the fourth point is legal ownership is with borrower subject to. I'll write it on the top. Okay? I'll write it on the top. So that you are able to say it. This is example. So I am writing it here. The fourth point is suit yourselves. Legal ownership with borrower. It is the same for hypothecation and mortgage, subject to client. In this case, legal ownership remains with the borrower. I suppose that is fine, right? Okay, so you have to tell me. आप लोग अपना काम नहीं करवाए जा रहे हो, हाँ? You are asking me to write fourth point is not visible and all that. मेरे क्वेश्चन का तो जवाब दो. Reply to my question as well. Stock cash credit limit issued against cash credit limit sanctioned against stock. What kind of security is this? Mortgage hypothecation pledge. Yes, Chinamma, right. Others. Chinamma has replied. What about others? Pandey Saab? Not right. Okay, Swarn Parvas Buddhi, syndicated loan, आएंगे. We are coming to that topic as well. I'm not going to leave any topic. Even if I have to use the next class, initial half an hour of the next class also, I'm not going to leave any topic. I'll adjust the time with the next chapter accordingly, but I'm not going to leave any of your doubts unresolved. Right? So now, all those who are asking me for doubts, you have to reply to my question as well. It's my doubt. Please resolve my doubt as well. It's a mutual discussion. Cash credit limit issued against stock. What kind of security it is? Hypothecation. It is hypothecation. Okay? So let us move ahead. Mortgage hypothecation, the PPT has the examples for you in the form of pictures. Mortgage, it shows a house. Hypothecation, it shows a car. Pledge, it shows jewelry. Land, it shows a right. So then we had assignment, set off or line. What is assignment? Assignment is you assign a right to the bank. So, what is assignment? Assignment is you assign a right to the bank. For example, you have an insurance policy with you. You have insurance policies. You get loan against insurance policies as well. Right? You get loans from insurance companies. Even banks issue you loans against insurance policies. They keep insurance policies as security. So whatever right you have got in that particular investment, you assign it to the lender, the bank. So that is called assignment of your rights in a particular asset. The best example of this, cash credit sanctions against book debts, your debtors. I told you, cash credit facilities are given against stock as collateral, or as debtor or book debts against as collateral, right? So the stock falls under the category of hypothecation and book debts. When the bank takes a charge over your book debts, so that in the event of failure by you to repay the money, the bank would reach out to your debtors as per the agreement, realize money from them, cover all its expenses and the money due to it, and give the balance to you. And if there is any balance left, it will make an proper arrangement, file a suit against you to recover that money as well. So assignment, book debts are assigned, crash credits are issued against the assignment of book debts. Okay? Then we have set off. What is set off? If I am maintaining an FD with the bank, I am maintaining deposit accounts with the bank, current accounts, saving accounts, and I am not able to repay my loan accounts, whatever balance I have with me is whatever balance I have with me in those accounts. Yes, Ajay, I am coming back to that, your doubt. So the bank can use that balance to set off my liability, the loan. The bank has full right to use that particular balance, the credit balance to set off the debit balance. In the books of bank, it has credit balance of the account, which the money which it owes to me, and it has a debit balance with the money which I owe to the bank. So the bank can set off the debit credit and ask for the balance. If the bank owes you money, it will give it to you, the balance money. But if the bank, if we owe the money, the bank will ask for the money, the balance left after setting off. So it is plus minus, right? Whatever assets, whatever accounts you have with the bank can use those accounts to set off your loan. Ajay, it is hypothecation because stock is a movable property. You enter into a hypothecation agreement with the bank that the bank works out a detailed agreement where it computes the value of the stock, and you have to issue stock statements at periodical basis, at periodical intervals to the bank at time, quarterly intervals, so that the bank, to make the bank assure the bank that yes, at any point of time, we have that particular value of stock with us, which is able to fulfill your requirement in case we default. So it is movable, possession is with us, but the bank has a mark on it, right? The bank has a lien over it. That is why CC limit issued against stock is hypothecation. Lien is nothing but a right, a priority right over somebody else's asset. A priority right over a legal right over somebody else's asset. Somebody is the legal owner of a property of an asset and you get a priority right over that asset, a legal right, that is called lien. Okay, these are all liens. The mark, these are all liens. I suppose, Ajay, I have told you why was it hypothecation. Okay, so we move ahead. Okay, this is a question from your ICAI past question papers. Okay, so the bank audit has been introduced just recently. The past 2 years, this question was asked for 5 marks in your previous exams only. A Mr. A approaches a bank for financial assistance for upcoming project. The bank branch manager, after verifying the proposal, is agreeable to financing Mr. A but asks for the security to be offered to the bank. Discuss the nature of securities required to be offered to the bank. This question was for 5 marks. You have to write about the nature of security. People who are asking me for how to attempt the answers, it is there. How do you need to give answers? There is nature of security. You have to tell them what is primary security, what is collateral security. I told you additional security is collateral security. An example of securities accepted by banks: guarantee, gold ornaments or bullion. What is bullion? Can anybody please tell me what is bullion? Please. Gold ornaments, we understand jewelry, jeweler. What is bullion? Plantations, agricultural advances, plantations are marked. Bankers, general liens, stock exchange securities, goods, stocks, debtors, immovable property, third party guarantees, life insurance policies. These are all collaterals. Another principal security is the main security which you keep with the bank, and collateral is the additional security in addition to the principal security to cover its risk. The bank is risk aversive, right? So it doesn't want too much risk, it doesn't want high risk. So to cover that also, so that if there is some, for example, you have given your property as primary security, there could be a downfall in the value of property prices and it might not be able to realize that much of amount which you owe to the bank. So the bank in that case keeps an additional security, collateral security there, so that if the primary security is not able to fulfill, to complete, to realize that much of amount which the loan was made to me, the bank can sell the collateral security as well to cover the balance, to cover the deficiency. So that is principal and collateral. Basically, column एक मेन सिक्योरिटी होती है और एक एक्स्ट्रा सिक्योरिटी होती है. मेन सिक्योरिटी
अगर कमी रह जाए कोई मेन सिक्योरिटी से फुलफिल करने में तो एक्स्ट्रा सिक्योरिटी को सेल करके वो आप रियलाइज कर सकते हैं, अपना लोन पूरा कर सकते हैं। दिस इज व्हाट प्रिंसिपल एंड कोलेटरल सिक्योरिटी इज फॉर। Okay, no one told me what is bullion. What are you people doing? Don't you know what is bullion? Bullion is precious metal in pure form. Okay, like gold bricks. Gold coins, gold biscuits, silver bricks. These are all bullions. The precious metal in its purest form, the 24 karat gold coins, biscuits. These are bullion. Yes, Harita. Thank you. Yes. Now we come to prudential norms wise. Put yourselves, fasten your seat belts. This is the topic which is very important. The NPAs, the bad loans, our economy is witnessing since the past few years. And those who were asking me for syndicated loans, we have a kind of loans over here, the consortium loans. We'll be reading about them, right? Yes, you all know about bullion. Why is it so? Unless and until I incite you or I influence you or I ask you time and again, only then I get a series of answers. हाँ? एक बार नहीं कर दिया करो यार आंसर। चलिए, so what are prudential norms? First of all, we need to understand what is the meaning of prudential. We are reading security wise, priority sector wise, and then prudential norms. What is prudential? Prudential terms takes its genesis from the word prudence, the concept of prudence. You all have read it in accounts, the concept of prudence, right? Prudential means exercising prudence, far-sightedness. It is written foresightedness over by mistake in the PPT. It is far-sightedness, durdarshita, vivekpuran, wisdom. Prudential acting with wisdom, samajhdari se, rationally. So, on the basis of your business wisdom, on the basis of your accounting wisdom, on the basis of your rationality, when some norms are designed, those are known as prudential norms. And you classify advances according to them. Right? Okay. So, what are the topics we are going to cover? Non-performing assets, the NPAs. What do you mean by out of order? What do you mean by overdue? What do you mean by accounts regularized near about the balance sheet date? Advances under consortium. What is drawing power? Drawing power is there for CC accounts. Whatever I am going to discuss with you, this you will find it very much useful while you go for practical bank audit as well. Right? I will be covering the basics so that as an article in the first or second year, you are able to experience your bank audit properly. But you will be able to complete it perfectly after you read the chapter of bank audit in your CA finals, right? Erosion in the value of securities, fraud committed by the borrower, advances against term deposits, NSCs, KVPs, advances to staff, agricultural advances affected by natural calamities. These are the 11 topics which we are going to study in detail. Okay? So, do you guys need a break of 5 minutes or some while after? Just let me know. If you need a break, you need to cover up the concepts, just digest the concepts we have done till now. So, this is something which is very new and very important. We are going to begin. If you need to time to digest the facts done till now, we can have a break of 5 minutes. Otherwise, I'll go away directly, right away. Because if I am going to start this topic, I am going to cover it. If somebody asks me for break in between, so I'll not be able to give you that required break. Okay, I have just received one reply some while after. Break after some time. Yes, Varna, prudence means conservation. You have done the accounting concepts of prudence and conservatism. Prudence and conservatism are related to each other. They belong to the same family of thoughts. Okay. Okay, Saika, Mr. Das, fine. It is taking time to reach the reply to me. Maybe I am based in far north. Okay, so might be it takes time. The satellite is taking time to make your reply reach me. Okay, fine, no issues. Non-performing assets. What is performance? When you do something up to the required mark, what is expected of you, that is performance. What is non-performance? When you don't do it or you don't do it as expected. So that is non-performance, right? What are assets for the bank? The advances, they are assets for the bank, right? And non-performing assets. So when the advances, they are going regular, they are performing. How do they perform? Do they do some kind of dance or singing act? No. Performance by advances means that the income from them is being generated regularly. There is no irregularity in income being generated from those advances. It is said that they are performing well. Like you perform well when you get good marks in the exam. And when you don't get good marks in the exam, the teacher says that he is not performing, she is not performing. Right? So Akshay, now after some time, right? This concept is really interesting. So when an asset is not performing as required of it in a bank, the asset for that bank is advances. It is not performing as required of it. It is said to be non-performing asset, and there is definition for that non-performing asset. So here you go. Classification of advances as per prudential norms. There are standard loans and there are NPA loans. Standard means regular loans, which are healthy loans. They are going regularly, right? The returns from them, the income from them, the payments from them are being received in a regular manner. Okay? So those are known as standard loans, regular loans. There is no irregularity. Or if there is any irregularity, okay, that was off for a shorter period of time or once or twice, that is it. Fine. Now standard loans, we have regular accounts and we have special mention accounts. What are special mention accounts? When a chartered accountant goes to audit the accounts or audit the books of a bank, he has to report upon special mention accounts. The accounts which start showing some irregularities. Although these irregularities are not of that much of extent which require much attention, but yes, for example, during school time, when you used to get low mark, you were one of the bright students, right? But since in one or two tests or exams you scored less and the teacher tells you, what happened to you? You were a bright student, why are you not performing? So that is what in one or two tests we could not have been well, there could have been some function, such kind of reasons are there, so we could not perform well. This is what happens with these accounts as well. Some regular accounts which start showing some stress signals. There was one or two irregular payments. The payments were 1 or 2 days late, or the payments were not of the desired amount which was fixed. So these show some stress signals. So the auditor has to classify them as SME. So those which show very less, or you say stress signals, are just the start of non-performance. Those are known as SMA 0 accounts. Then those which are overdue between 31 to 60 days. Okay. So an account, I got the definition of SMA 0 accounts. The account in which the amount is overdue. The amount is due on the due date. Right? The amount is due on the due date. So if it is not paid on the due date, it becomes overdue. If it is overdue for up to 30 days and by the end of 30 days or the 30th day or within 30 days you make the payment, it is SMA 0 account. But if it remains overdue for more than 30 days and remains overdue for more than 30 days, but it is, you can say repaid before 60 days from the due date, right? It is known as SMA 1 account. And if it is overdue for more than 60 days further on the road, and it takes up to 90 days, but the overdue amount is paid within a span of 90 days from the due date, it is an SMA 2 account. So we have standard regular accounts, which are the normal accounts. Then under standard loans, we have SMA accounts, which require special mention, because once we give attention to them at this stage, they might get corrected, they might get regular. Because once irregularity starts, it is an infection. This is an infection. This is like the corona chain. Once it starts, it can lead up to NP. So I can easily understand if the overdue amount crosses 90 days, within 90 days there is no entry, no in the account, no current entry, nothing paid, koi halchal nahi hai account pe. That means it is not performing. After 90 days, you put it into NPA. And in NPA, we have substandard, doubtful. Under doubtful, we have three categories: D1, D2, D3. Doubtful 1, doubtful 2, doubtful 3. And the last category is loss assets. This chart is very much important for you, right? This particular chart is very much important for you, and we'll understand it in the form of a timeline. Okay, so let's do what is NPA. So we did, okay. So this is my timeline. Right? This was my due date. We start with due date. Okay? This was my due date. The font is okay, or should I increase? Okay, you guys are asking for break. Okay, fine. So what can we do? We'll break for 5 minutes. I'll complete this timeline, right? And when you come back, we'll discuss the timeline. Fine? We'll break for 5 minutes. If you people are having study material with you, that would be really very good. Otherwise, the presentation is also enough for time being. So we are breaking for 5 minutes. We're taking a break for 5 minutes, right? Yes, sir. Okay, I've written it in figure from science, right? I hope it is clearly visible in amount. I hope it is clearly visible. So this is the timeline. I would like each and every one of you to please draw it with you. Please draw it, that is, then we will do the NPSI. Usually when we do theory, we read theory, we get confused, but human mind is such that it immediately reacts and memorizes in the form of pictures, diagrams, charts, timelines. So this is the NPA timeline. I hope you are able to read it from the board. Not getting any answers. Should I suppose that all are busy in drawing it on their notebooks? Okay, I'll get aside. Yes, Amar Jyoti Das, the CE can become branch auditor because saving account is not indebtedness, right? We had read about the declaration of indebtedness. If you are not indebted to the bank, can be the branch auditor. Should I proceed further? Can I? Okay. So let us understand this concept. This is the due date when my EMI or my whatever amount interest or part of the principal was due to be paid. Okay? This was my due date. So if I pay it on the due date itself, it is a regular account under the standard loans account. Right? So till SMA 2, my account is standard. However, if I make a default in making the payment on the due date and the default is corrected within 30 days itself, after the due date, it is an SMA 0 account. Someone asked me how to identify SMA 0 accounts. There are the banking softwares have this function with them. They give you the list. Otherwise, you can go through the statements. You can get to know when was the due date, and if the amount, the credit entry was not received from the customer on the due date, and it is received between the due date and 30 days from the due date, it is an SMA 0 account. Now, gone are those 30 days as well, no payment made. It falls into SMA 1. From the 31st day itself, it falls into SMA 1. Till 60 days, it remains SMA 1. If you make the payment before 60 days, it is SMA 1. Work done, your default rectified. But no, the payment was not even made during SMA 2. 60 days have also elapsed. Then you are given the deadline till 90 days. 3 months, we calculate actually days. The RBI's definition gives us days, not 3 months, right? So 90 days. Till 90 days now it has fallen into the SMA 2 zone. Till 90 days, it is SMA 2 account. So if you make the payment before 90 days, the default is rectified within SMA 2 itself. But once you cross 90 days, your account was standard till that particular day, it is no more standard now. It has become NPA. Either you have not paid your interest or principal amount or EMI in due time till 90 days. Your account has fallen into NPA and you are not performing well. Okay? Fine. Then, when it falls into the NPA segment, after 90 days, it has become NPA. If it remains NPA for 12 months, till whatever amount was due on this date, you are not paying any amount, or you are paying amounts which are not enough to cover the amount which was on due on this date, or interests have been credited meanwhile. So the amounts keep on increasing and still you are not paying amounts which are equal or which are able to recover the deficiency. After 90 days till 12 months, now it has become NPA over here. Till 12 months, if you don't correct your default, the asset remains substandard. It is known by the name of substandard. The deficiency still remains over here and it continues by the 12 months here. The 12 months are from these 90 days now, not from this due date. The 12 months are from this 90 days now. From 90 days to 12 months. From this 90 days date to 12 months, it is substandard. And if the default is not rectified, corrected within this period, after the completion of 12 months from these 90 days, it becomes doubtful. The bank has a doubt whether we'll be able to recover the money or not. So doubtful has 3 categories. After this 12 months till 1 year, the category is doubtful 1. After 1 year, the category is doubtful 2 till 3 years. Okay? 3 years from this 12 months till 1 year, it is doubtful 1. Then from 1 year to 3 years, it is doubtful 2. And even if 3 years have elapsed, you have not made sufficient payments or the account is irregular NPA, after even 3 years, the category becomes D3. Doubtful 3. Right? So, this is the whole life cycle of a non-performing asset, starting from there, over here. Right? And there is one more category, the loss assets. Loss assets are those assets where the bank has lost hope that whether we will be able to recover the money or not, or a fraud has occurred in relating to that account. Those are loss assets, completely lost, pure loss for the bank. So this is the timeline for the NPA. Let me share my screen. Okay, so now what is a non-performing asset? We can understand it from here. We can understand it from here. NPA starts from here. Look at the definition on the screen. A non-performing asset is a loan or advance where interest and oblique or either interest or the installment of the principal or both remain overdue for a period of more than 90 days in respect of a term loan. So we were talking this about in respect of a term loan. Right? This is NPA. The account remains out of order in respect of overdraft or cash credit. In respect of overdraft or cash credit, the account remains out of order. Or in the case of bills, bills means the amount remains overdue, the bill amount remains overdue for a period of more than 90 days in the case of bills purchased and discounted, that is overdue amount. You can read it from there, right? Then we'll proceed further. Okay, so Anandi, this is my creation only. This is not there in the book. So if you want to draw it, you can draw it. This is just a way to learn the timeline of an asset from performing to non-performing. This is not there in the book. That is why I asked you guys to just jot it down. So 12 months from the 90 days. Haritha, 12 months from the end of 90 days. Yes, I'll come, Prashant, I'll come to cash credit and bank overdraft. Yes, Amarjyoti, Haritha, from 90 days to 90 days, after this 90 days, first day to 12 months. This is start of NPA. If an account remains NPA for 12 months, from these 90 days for 12 months, then this is substandard. Again, you reach point 0 on 12 months. From this point 0 till 1 year, it is D1, doubtful. From 1 year point 0 to third year. Now this third year is from 12 months only. So from 12 months to 1 year, it is D1. From 1 year to 3 years, it is D2. And after 3 years, it is D3. Okay? No, 3 years not from 1 year, Hanita. 3 years from 12 months of substandard. Let us move ahead. What is out of order? An account should be treated as out of order if the outstanding balance remains continuously in excess of the sanctioned limit or drawing power. Drawing power will come to that. Drawing power is the limit up to which you can withdraw money from your CC limit. So there could be sanction limit, like we are sanctioning you 50 lakhs limit. You can use 50 lakhs. But at times, as per the stock availability, because stock is hypothecated against that limit. So as per the stock availability with the borrower, they cannot time and again increase or decrease the sanction limit. So there is a term drawing power. As per the availability of stock, you can withdraw this much amount only from the out of the sanctioned limit. Okay? So CC account is treated as out of order if the outstanding balance remains continuously in excess of the sanction limit or drawing power. If you have been sanctioned 50 lakhs and your drawing power is 45 lakhs, and if the outstanding balance remains continuously in excess of those 45 lakhs, it is set out of order. The outstanding balance in the principal operating account is less than the sanctioned limit or drawing power, but there are no credits continuously for 90 days as on the date of balance sheet, or credits are not enough to cover the interest debited to the same. So 3 cases, an account is treated as out of order if outstanding balance remains continuously in excess of the sanction limit 90 days, more than 90 days, it remains excess. You are allowed to withdraw only 45 lakhs and you have overdrawn. Continuously it is in excess of that limit. Or you have the balance is below the drawing power, but whatever credits you are making in that account, you are depositing money into that account out of your trade, out of your sales, out of your income, that is not enough to cover the outstanding amount as on the balance sheet day. There are no credits continuously for 90 days. It has happened since 90 days. You haven't made any credit entry. You haven't deposited any amount. The third case is you have credited some amount. You have deposited money, but that money is not enough to cover the interest debited during that period. So that money is not enough. 3 cases out of order. Out of order is if the balance is continuously overdraft, more than the sanction limit or drawing power, you have used more than your sanction limit or drawing power, or you haven't made any deposits in that particular loan account, haven't repaid any money for 90 days. It has been 90 days, you haven't made any credit entry. Or if you have made any credit entries, you have deposited any amounts into your loan account, those entries are not, those sum, that deposits are not even enough to cover even your interest even. The interest charged by the bank on the amount outstanding, at least you could cover up the interest with the deposits, but they are not even enough to cover the interest, then it becomes out of order. Any amount due to the bank under any credit facility is overdue if it is not paid on the due date fixed by the bank. So this is overdue. This is all overdue. After due date, this is all overdue. No, Sanjay, it is not D2. Till first year, it is G1. After first year, up to third year, from 1 to 3 years, it is D2. And after crossing 3 years, G3, there is no year 2. There is no year 2. There is year 1 till 1 year, it is D1. After 1 year, it is D2 up till third year. Then after 3 years, it is G3. Yes, you can say that there is a gap of 2 years. It is D2 for up to 2 years. One first year to third year. Right? No, it is not 2 years. Sorry. After 1 year, it is not like this. Whatever you have written, it is not like this. From first year up till third year, this is D2. After the completion of third year, it is D3. Right? Yes, I am explaining out of order with a practical example, Radha. Let's do that example. Can I erase this? Rather, overdue is this. After due date, it is overdue only. Okay. Suppose the bank has sanctioned you submit CC limit of rupees 60 lakhs. Sanctioned limit is rupees 60 lakhs. Okay? And on the basis of availability of stock with you, your drawing power is rupees 55 lakhs. Your drawing power is rupees 55 lakhs. Right? So you have been sanctioned the limit of 60 lakhs and your drawing power is 55 lakhs. You might have submitted stock statement, and as per the stock statement, the bank analyzes and concludes that at this particular moment of time, you have 55 lakhs of the value of stock available with you. So we cannot give you the sanction, we cannot lend you the amount. You are not able to withdraw money more than 55 lakhs. Although your sanction limit is 60 lakhs, but on the basis of security available, you cannot withdraw more than 55 lakhs. And this GP is calculated every time stock statement is submitted. And you cannot withdraw more than this GP. If you have stock available up to 60 lakhs or more than that, then you can withdraw up to your sanction limit. But if you have stock less than that value, you can withdraw up to the value of stock. Right? And then you have amount outstanding. Amount outstanding continuously from January to March. You have drawing power of 55 lakhs and you have withdrawn 47 lakhs. It is completely fine. You have withdrawn within your drawing power, right? And the interest, Palak, sanctioned limit is what the amount the bank has sanctioned you. The bank has given you that we give you a loan of this amount. That is 60 lakhs. That is sanctioned. You can withdraw up to 60 lakhs. Only if your DP is up to that amount. That is, in any case, even if your stock is more than 60 lakhs, you cannot withdraw more than 60 lakhs. Right? 47 lakhs. Interest debited during this period. Interest debited during this period. Three lakhs interest has been debited to your account, right? And total credits you have made, total amount you have deposited in your CC accounts during this period, rupees 1, or you can say rupees 2 lakhs. So you have sanction limit of 60 lakhs, your drawing power is 55 lakhs, and your amount outstanding was 47 lakhs. You have used till 47 lakhs. That is fine. You could use up to 55 lakhs. You have used up to 47 lakhs. Interest debited during this period is 3 lakhs. Now you owe to the bank 47 lakhs. You are not making any credits since 90 days. What has happened to you? You have used 47 lakhs. Go in the market, sell your product, get realized money, realize your debtors, give it to us. We should know that you are running in a healthy manner. You are running your business in a healthy manner. So, the bank has debited interest on this 47 lakhs, 3 lakhs for that particular quarter. And in that quarter, you have made credits of 2 lakhs. Your credits are not even enough to cover the interest debited. Your credits are not even enough to cover the interest debited. Interest debited was 3 lakhs. And you have made credits of 2 lakhs. This is out of order. Your account is out of order. This is example of out of order. Right? So, income recognition. First of all, you should know non-performing assets. We'll do it with income only. Right? Let us do further. Accounts regularized near the balance sheet date. What happens is when you go on an audit, if the banks know that will be audited at the end of the year, 31st March closing time. So what happens is some irregular entries are seen, credit entries are seen in the banks. For example, they are maintaining an FD with the bank. So it has happened that the account has been out of order or it has been overdue for some time, and at the like you have read about window dressing, it is something like that. At the end, near the balance sheet date, that is 1st of March, the borrower accounts, the borrower makes a few credits, right, from his other bank accounts, or he has taken a loan from another bank, or he has taken a loan from the same bank, and he is utilizing the funds from that second loan to make credits in the first loan. This is not at all healthy. This will result into a cycle of loans and loans. For what purpose you have taken the loan to do business, and if you are getting returns from that business, you should deposit that in those accounts. If there is an account of a family member with the same bank, you ask for a loan from that member, and with the last week of closing, you make credit entries, and during the first week of April, you again make the debit entry. This is what, just at the end of the closing year, at the ending date, for just with one transaction, you just make sure your account as it is healthy. But deep inside, it is not healthy. You are making some adjustment entries. So the borrower accounts where a solitary or a few credits are recorded before the balance sheet indicating inherent weakness on the basis of data available, the account should be deemed as NPA. For Rupa, you can use only 55 lakhs because that is the sub-limit sanctioned within your, you can say that is a sub-limit sanctioned within your sanction limit. Okay. So see, this is a question from your exams. Your firm has been appointed statutory or statutory auditor by a nationalized bank. Your senior advised you to check all the standard assets shown in the balance sheet as on 31st March 19. While verification, you observed that one of the accounts was regularized on 28th March 2019, for which the interest and installment amount was overdue from the quarter ending 30th September 2018. 6 months overdue. 6 months overdue, and account was regularized. So what did the customer do? He made some credit entries and it regularized the account. That I have made this entry, now my asset should not be an NPA. It regularized near the balance sheet date as on 31st March. So the balance sheet is drawn up to 31st March. Next year starts on 1st April onwards. So from 1st April onwards, within the first 15 days or 7 days of April, he reverses the entry. He gives it back to the same account from which it was credited. So this was just an arrangement. So whenever we go on bank audit, we usually ask the bank manager that in particular this particular account, there has been just regularization entry at the ending days. I want that particular account statement for April as well. I want the statement for April as well. Give me the statement, I want to have a look over it. And if I find the same entry reversed, I would classify it as NPA as per the proper category. So the account was regularized after the payment of overdue interest and installment amounts was done on 26th March. On the last day of the financial year was reckoned as a date of account being NPA by the bank. As a statutory auditor, will you agree with the bank's policy? So this is the answer. MCQ. This is an MCQ. Part A says, as the interest charge in the account was overdue for more than 90 days, it should be classified as NPA and should be considered as substandard asset for the balance sheet. As the overdue interest and amount was paid before the balance sheet date, there is no reason to classify the account as NPA. The auditor should not agree with the bank's policy to regularize the account before balance sheet date, as overdue interest indicates more than normal risk attached to the business. And the last option is, bank can regularize the account before balance sheet date but should ensure that the amount has been paid through genuine sources and not by sanction of additional facility, and the account remains in order subsequently. So genuine sources, there is no arrangement, not an additional loan sanctioned to fulfill the first loan liabilities, and the account remains in order subsequently in the coming months as well. So we have to check these three conditions. The answer is of the same color as the question is. This is a hint for you. The answer is for the same color as the question is. The correct answer is D. We can term it as NP if these three conditions are not satisfied. If these three conditions are satisfied, it has been paid through genuine resources, it has not been met by the sanction of additional loan or facility, and the account remains in order after March as well. In April, May, June, whenever we are auditing. Right? The correct answer is D. So let us move further. There is correct, incorrect. Auditor of a nationalized bank is to be appointed at the annual general. These are questions from your exams. Auditor of a nationalized bank is to be appointed at the annual general meeting of the shareholders. Incorrect. Nationalized bank's auditor has to be appointed by the bank's board of directors with the approval of Reserve Bank. Banks recognize non-performing assets on accrual basis. Will do this. Central government granted advances where the guarantee is not invoked, repudiated, would be classified as standard asset. So there are some advances, some priority sectors where the government gives guarantee. So these advances are known as central government guaranteed advances to some institutions. Okay. So where the central government guaranteed advances, where the guarantee has not been invoked or repudiated, repudiated means cancelled, khatam karna, would be classified as standard asset. Is it true or not? Central government backed advances, it is true. It can be classified as NPA only when the central government has revoked its guarantee or repudiated itself. No, Sanjay, it is not A, D. Is the answer. So central government guaranteed advances, even if it has passed the phase of standard, it has fallen into NPA. It will not be classified as NPA until the government guarantee is invoked or repudiated or cancelled. But for the purpose of income recognition, we'll do what is income recognition. For the purpose of income recognition, right, it would be treated as NPA. It would not be classified as NPA, but it would be treated as NPA. This difference. In the balance sheet, it would be treated as, it would be classified as substandard, as standard asset, but for prudential norms purpose, for recognition of income coming from this asset, the interest income, it would be treated as NPA. The same is not with the state government backed loans. The state government guaranteed advances, they move on like the normal advances. It is only with the case of central government guaranteed advances. We have next question with you from the exam. In the course of audit of True Finci Bank as at 31st March 2020, you observed that in a particular account there was no recovery in the past 18 months. The bank has not applied the NPA norms as well as the income recognition norms to this particular account. When queried, the bank manager replied that this account was guaranteed by the central government and hence these norms were not applicable. The bank has not invoked the guarantee. Comment. Would your answer be different if the advance is guaranteed by a state government? Yes. What does the answer say? If a government guaranteed advance becomes NPA, then for the purpose of income recognition, interest on such advance should not be taken to income unless interest is realized. So what is income recognition? What is income recognition? Income recognition is banks record their income on accrual basis. Right? Accrual is as and when right to receive the income arises. Right? So, bank records their income on accrual basis. In the case of NPAs, In the case of NPA, the interest income, we are talking about interest income. The interest income is recorded on cash basis only in the case of NPAs, because there is no guarantee, there is uncertainty whether you will be able to realize this interest or not. Whether you will be able to realize this interest or not. So the concept changes from accrual to cash. When you receive the interest, you will credit it into your profit and loss account only then in that particular year, not now. Third, but audit is done after 31st March, and on 31st March, all incomes are credited on accrual basis. During the audit, if you classify any account as NPA, in addition to those accounts where the system has automatically classified some accounts as NPA, the bank system automatically classifies some accounts as NPA, and there are some NPAs we find inherent limitations of computer system as well. We also find some NPAs, those accounts, income from those accounts, the interest from those accounts which has been recognized on accrual basis in the profit and loss account of the bank, that has to be reversed. That has to be reversed. Right? So you have to reverse that income from the profit and loss account. You have to pass adjustment entries, AS4. You have to pass adjustment entries in the bank's financial statements before their finalization. This is the concept of recognition of income. So what does it say? If a government guaranteed advance becomes NPA, then for the purpose of income recognition, interest on such advance should not be taken to income unless interest is realized. However, for purpose of asset classification, credit facility backed by central government guarantee through overdue can be treated as NPA only when the central government repudiates its guarantee when invoked. Invoked means when the bank asks for the government to the government for invoking. Invoke means when the bank utilizes its right. When the bank uses its right to invoke. Invoke means to ask for. Government ko bolna, aao rupya do. Invoke is to ask for. Ask the government that this account has become bad, please. You are the guarantor. And if the government repudiates or cancels the guarantee, before that, you can take it to NP. So in the balance sheet, unless and until the government has repudiated the guarantee or the bank has not even invoked the guarantee, this asset will be shown as standard asset. Even though it has become NP, it is shown as standard asset. But in profit and loss account of the bank, you will treat it as NPA and reverse the income accrued from it. This is only for central government backed advances, right? In the case of state government, we will not do like this. We will do like you do with the normal NPA account. You will reverse the income and show it as reverse the income is same in all the cases. You will show it as an NPA in the balance sheet. So here it was income recognition. Income from non-performing assets, NP is not recognized on accrual basis but is booked as income only when it is actually received. Asset classification would be borrower-wise and not facility-wise. All facilities including investments and securities would count as NPA. This is very important point. There is this person A. This is A, right? This is his bank. He has taken a term loan, a cash credit facility, a home loan also from the bank. Term loan is for business, for machinery, right? He has taken these loans. Okay? Here is this person A who has taken this loan from this particular bank. Term loan, CC, home loan. and the term loan is going good, it's healthy, right? The cash credit is going good, it is healthy. But the home loan, it has become NPA. What could be the reason? He could not have that much of amount. So what is he doing? He is putting that amount in term loan and CC, and now home loan. Home loan is left behind. He is not putting any crediting any amount in home loan. So these are the various facilities enjoyed by Mr. A from the bank. Loan facilities. Term loan is a loan facility. CC is a facility. Home loan is a facility. And person A is enjoying these three facilities. The borrower is one, but facilities are three. So, what does it say? Sanjay, I am explaining you NPA now. Where should I explain LFAR in between? I don't understand. So, borrower wise, asset classification would be borrower wise and not facility wise. That means even if one facility of the borrower becomes NPA, all his loan accounts would be termed as NPA. It is not like this that you would make the housing loan account, will show the housing loan account under NPA and you will show the term loan account and cash credit account under standard assets just because they are being run in the regular manner. Even if one loan account out of many loan accounts of the same borrower becomes NPA, all loan accounts will be termed and fall under the category of NPA, whether those accounts are healthy accounts or not. The NPA classification is borrower wise, person wise, and not facility wise. Right? This is a very important point. Record of recovery classification as NPA should be based on the record of recovery. Availability of security or net worth. It is not required. Whatever security you have, you will be able to rely from that security. Or the net worth of the borrower is really good. We don't know about it. Net worth is good. He's at his home. Good for him. We have security, but when will we be able to realize the security? It is not like this that we have security, we are just fine. We have the security. Why should we classify it as NPA? No. The account is NPA. It is NPA on the basis of recovery record. If you are able to recover anything from the borrower that is able to rectify the default, then it should not be termed as NPA. Otherwise, whatever value of security you have, whatever be the net worth of the borrower or the guarantor, the account has to be treated as NPA. Right? Let us move further. So banks recognize income on non-performing assets on accrual basis. The answer is incorrect. Income from non-performing assets is not recorded on accrual basis, but due to its uncertainty, it is booked only when it is actually received. There is no difference in provisioning of NPA as regards to categories of NPA. Whether the debt is secured or unsecured. What does this question ask you? Now we have come to provisioning of NPA as well. I'll take some doubts first. Radha, suppose there is an out of order account, like in our example. On 30th March, I have my mother's account as well in that bank. My account is of 10 lakhs and from my mother's account, I transfer an entry of 10 lakhs to my loan account. Right? So I asked my mother that will you lend me this account, this amount? She asked, okay. So, or my friend in that particular bank, he is also using a loan facility from the bank. From his loan account, I transferred this 10 lakhs into my loan account at year end. Fine. Is this a genuine source? I was given a loan for running business, for investing in business, and I had to repay the money out of the income generated from that business. If I am not able to repay the money from the income generated for that business, that means I am running into losses or I am not making good profits or my intention is malified. So on 29th March, I asked my friend that make a transfer entry to my account. He makes a transfer entry of 10 lakhs. On 31st March, books are closed. As a chartered accountant, I'm going there for auditing their books. I'll see the books till 31st March. And I'll see this account was irregular, but at year end on 28th March, suddenly out of nowhere, magic happens and they get an entry of 10 lakhs in their account. So this account could not be termed as NPA as it was regularized before the NPA date. But I am doubtful. I asked from the bank manager about this account's April statement as well after the year end date. And in April statement, I see that there is no credit entry, but I see a debit entry of 10 lakh rupees to the same account from which credit entry was received in March. So this was just an arrangement. So just an arrangement that you give me 10 lakhs, I'll return it to you in April. Nobody is bothered about April. I want an entry in March itself. So this was not from a genuine source. Okay. And in April as well, I made no credit entries. So this gives rise to suspicion that this account is not going good and I'll term it as NPA. Had that money been from genuine sources, his receipts from debtors, his sale of stock, and in April he would have been making credit entries in his loan account from his business proceeds, then I would have been assured that yes, this account was regularized in a proper manner. Yes, Sanjay, I would come to that. So the question says, I would first explain in English, then in Hindi. There is no difference in provisioning of NPA as regards to categories of NPA, whether the debt is secured or unsecured. Critically evaluate the statement on the basis of provisioning norms for NPA of a specialized nationalized bank. We all know, we all have read about making provisions. What do we make provisions for? On the concept of prudence. What is prudential? Prudential says, don't recognize the future profits as of today, but make provision for the future losses. Tell the world you might incur a loss, but don't tell the world that you will be having profits in future. Be conservative. Don't look for profits. You want profits, but don't recognize them that early in your books. But for losses, you start making provisions. If I incur loss, I have to be ready for that. So NPAs are losses. You are not receiving any income from them. They are non-performing. You have to make provisions upon them. Whatever amount is due out of the loan from the non-performing asset, you have to make provisions upon them to recognize this loss in your books. So there are two works attached with an NPA as after the bank audit. The one is you have to reverse the income from NPAs. The income has been credited to the bank's profit and loss account on an accrual basis. The accounts you find NPAs, reverse the income which has been credited to the accrual on the accrual basis to the bank's profit and loss account from these accounts. First work is that. So that is done in the case of central government guaranteed accounts as well. Reversal of income, you do it. The second thing comes when you come to the balance sheet. Profit and loss is done, now you come to the balance sheet. Now balance sheet, you have categorization. So for categorization, you classify standard, substandard and doubtful and loss assets accordingly. So the central government account, guaranteed account, unless the guarantee is invoked by the bank or guarantee cancelled by the central government, you show it as standard only, even though for income recognition purposes, you treat it as NPA. Right? What does the question say? The question say, NPA, whatever category of NPA it be, standard, substandard, doubtful or loss, whether it is secured or unsecured, we don't do provisioning. It is wrong. Banks do provisioning. They make provisions and charge it to their profit and loss account as well as make them stand as balances, as provisions in their balance sheet as well. So they make provisions, like make provision for depreciation, provision for doubtful debt. In the same way, these are doubtful debts of the bank, the NPAs. The banks make provision on them. Classification of NPA should be on the record of recovery. It should be borrower wise and not facility wise. What are the provisioning requirements? Here you go. You make provisions like this. You make provision like this, right? So standard assets, you make provision of substandard assets. For standard, even for standard assets as well, even for your standard assets as well, you make a provision of 0.25%. For standard assets as well, you make a provision of 0.25%. Right? For substandard, on the outstanding amount as on year end date, 15%. On doubtful assets, D1, if it is secured, 25%. If it is unsecured, 100%. There is no security available. There is no security available. 100%. Doubtful, D2, 40%. Unsecured, 100. More than 3 years, 100. Even if it's secured or unsecured, doesn't matter, 100%. And loss assets. The loss is identified by the bank or internal auditor or stat auditor or RBI inspection says that please write this loan wholly, write off from the books, right? This loan is not going to get recovered by you. This is a loss. A fraud has happened or the party has become insolvent. So this is how you do provisioning. Okay? You calculate the amount, for example, standard assets for up to the tune of 1 crore. 10 crores. Substandard 5. Doubtful, you categorize it accordingly. You make provisions upon them. 0.25% provision. 15% provision. If doubtful, 1 crore. And it is secured, unsecured, you have to separate it. Right? And loss asset full. You carry the provision amounts accordingly, find percentage, and you make provisioning accordingly. Total amount of provision. So this is how you treat non-performing assets in your profit and loss account as well as your balance sheet. In profit and loss account, you reverse the income credited on accrual basis from these non-performing assets. In the balance sheet, you make provisions, show them under the appropriate head, calculate their amount and make provisions on them as per the given percentage. And these provisions are also charged to the profit and loss account. This is what we do with an NPA. Okay? Let us move further. Consortium. What is a consortium? Somebody was asking me what are syndicate loans. Syndicate loans are big loans where some banks come together, they form a group. No bank is, all banks by equal status, equal position, and they lend loan to the borrower. The case of Vijay Mallya with SBI and all. That was syndicate. Syndicate. What is consortium loan? Consortium is an association or typically association is typically of several companies. So banks are companies as well, so banking companies. In Hindi you can say Sahayata Sangh. Sorry, I was telling you the previous question, I'll tell in Hindi as well. The previous question, I'm sorry. It says NPA की provisioning करने की जरूरत नहीं है, चाहे NPA secured है, unsecured है, चाहे किसी भी stage पे है. कोई भी कैटेगरी का हो हमें एनपीए की प्रोविजनिंग करने की जरूरत नहीं है. दिस क्वेश्चन स्टेटेड दैट और हमने आंसर दिया नहीं जरूरत है. हमने फुल फ्लेज इसको प्रोविजनिंग बताया. Consortium advances means advancing loans to a borrower by 2 or more banks jointly by forming a consortium. In a consortium, there is joint appraisal. Appraisal means to check the credit worthiness of the borrower, control, monitoring the borrower, and exchange of valuable information among the banks. Usually a bank with higher share which gives higher proportion of loan to the borrower and it leads the consortium. It is a lead bank. This is the main difference from syndicate. Consortium, there is a lead bank. Right? In consortium, there is a lead bank. The banks with a higher share will lead the consortium. Consortium advances should be based on the record of recovery of the respected individual members. Suppose there are many banks. There is Bank 1, Bank 2, Bank 3, Bank 4. 4 banks have formed a consortium to give a big amount of loan to a particular borrower. So Bank 1 has given 50% and the other 3 have given their respective share, 10, 20, 30, 20. Right? So Bank 1 is the lead bank, but the Bank 1, when it receives the income, suppose you have pooled the income to Bank 1, you will say that the facility will be enjoyed from Bank 1. This will be borne by all the banks. Interest income will be enjoyed by all the banks. Right? So, if the lead bank has to pass on the share of their income to the other banks on a periodic basis. If the lead bank doesn't do so, then the NPA has to be classified as per bank wise. The other banks, if they are not receiving their income, for them it is non-performing. Although the loan is a performing asset with the lead bank. So the participating banks have to make arrangements with the lead bank that the interest income is periodically transferred to them as well. Okay? Fine. Just 10 to 15 minutes more will complete this topic. So consortium advances should be based on the record of recovery of the respective individual member, where the remittances by the borrower under consortium lending arrangements are pooled with one bank, or where the bank receiving remittances is not parting its share with other member banks. The other banks would treat it as NPA in their books, although it is not NPA in the lead bank's books. So the banks need to arrange for their share of recovery, and the lead bank would be responsible for computation of drawing power, that how much the borrower can withdraw from the respective banks. If it is withdrawing, if it is maintaining accounts with all the banks, so it will calculate the total drawing power and it will allocate the drawing power to all the banks proportionately. If it has calculated drawing power to 100 crores, it will keep 50 crores with it and 10, 20, 22 other 3 banks as per their proportion in the loan. So that the particular borrower can withdraw up to that much amount from those banks. Okay? Lead bank is responsible for computing the drawing power. And on the request of the borrower, the lead bank can allow, I would say, your bank, I don't have a branch in my city, this particular 10% share bank, I have its branch in my city. Please allow me to withdraw more from this bank as it will be easy for me. So we have to take permission from the lead bank. The lead bank can allow us to withdraw more than the drawing power allocated to this bank, but the total drawing power should remain the same. Right? Your firm has been appointed as central statutory auditor. This is an exam question of a nationalized bank. The bank follows financial year and accounting year. The bank is a consultant. This is a very easy example. You can do it from your notes as well. It is an easy example. Right? It is an example based upon question on how the bank, the individual bank, although the asset was performing one, but the individual banks had to classify it as NPA just because they were not receiving the shares. Erosion in the value of securities or frauds committed by the borrowers. So erosion means soil erosion, you know. Similarly, erosion means gradual destruction or decline in the value of something. So whatever security or collateral you have furnished, its value is decreasing, declining day by day. In such cases, it is not at all rational to follow asset classification. You should directly classify the loan as doubtful or loss. Right? You should directly classify it as doubtful or loss. When loss and when doubtful? When the realizable value of the security is less than 50% of the value assessed by the bank. The bank assessed the value of the security as 1 crore. But now at present the value of the security is somewhere around 40 lakhs. It has fallen below 50%. Classify it as doubtful. If the value falls below 10%, classify it as loss. From 10 to 50, it is classified as doubtful. If it falls below 10%, classify it as loss. Because the security is of nuts to us. Right? It is peanuts in front of the loan. Advances against term deposit, NSCs, KVPs, Kisan Vikas Patra, we furnish these as securities. Term deposits, national savings certificates, Kisan Vikas Patra, we give these as advances against FD. You know, advances, loan against FD, loan against term deposit is FD, KVP. So we keep these as securities. As far as adequate margin is available to us, the loan is of 5 lakh, the FD available is of 7 lakhs. It is completely fine. You know, set off, we didn't set off. We'll set off if the customer doesn't pay us the balance loan amount. We'll set it off with the FD. We'll set it off with the security available, NSC, KPs, all the liquid securities. Right? Advances to staff, very easy. Interest bearing advances we give to staff, they are taken not as a banker customer but as an employer. Okay? So these advances are classified as NP only when there is default in repayment of installment or principal on the respective due dates. Because there are much benefits associated with these accounts, so normally these accounts don't run into NPs. The last but not the least, the agricultural advances. So it's my sincere request to you, this is one of the most confusing topics, agricultural advances. We'll just do the basics. We'll go into the depths in your CA finals. You'll just be asked upon the basis of this slide only. Will not be asked beyond this. So please understand what I'm going to tell you, and we have to restrict ourselves to basics only. Please don't go into depth. Agriculture advances are of two types. One is term loan. Term loan, you take it for purchasing agricultural machinery. Another is the government currency KCC. Kisan credit card. Kisan, farmer is known as Kisan in our Hindi language. The Kisan credit card scheme. It is not a card issued, but a kind of CC limit issued to the farmers. It is known by the name of KCC, Kisan Cash Credit or Kisan Credit Card, you can say, right? It works like a CC, but complete features are different. So agricultural advances are for long duration crops and short duration. There are two types of crops. Long duration. Long duration crops are those crops whose crop season from sowing till harvesting of the crop is more than 1 year. Sugarcane, rubber. So, longer than 1 year. Short duration crops are those crops which are not long duration crops. Their crop season is less than 1 year. Paddy, rice, wheat. The crop season is the season from sowing till harvesting. Okay? And since India's agricultural economy, and we differ much from north to south in our agricultural features. There is always a drought in Maharashtra every year. There are floods. I am in Punjab. There are no floods. We are longing for the rains in Punjab. But we see other areas, Bihar and eastern areas, they are flooded with water. The monsoon has been disproportionate. Right? So it is going to affect the cultivation of crops in those areas accordingly. In Punjab, we sow paddy. You have got sugarcane in Uttar Pradesh and Maharashtra. So since this is region specific, the agriculture, that is why the central government, the RBI, has left it upon the discretion of the state only. Whatever crop season do you decide? The crop season for each crop, which means the period up to harvesting from sowing, it is determined by a committee formed by the state, which is known as State Level Bankers Committee, SLBC, in each state. And each state decides crop season for the crops sown in its jurisdiction accordingly as per the climatic conditions, weather conditions, right? So what are the NPA norms for agricultural advances, including crop term loans? So agricultural advances are KCC, I told you, Kisan Credit Card. KCC. KCC. and crop term loans. KCC and crop term loans. Right? So a loan granted for short duration crop will be treated as NPA if the installment of principal or interest remains overdue for 2 crop seasons. Either the principal or the interest or both remain overdue from the due date for 2 crop seasons. They give you time till 2 crop seasons. Will give you time. You have time till 2 crop seasons. Sell the crop, get money, realize money. If you are not able to sell it in 1 crop season, we'll give you another crop season for short crop season. For long crops, it is 1 crop season because it is already more than 1 year. So if you don't receive interest or principal from the loan given to the farmer, in the case of short crop season, for continuously 2 short crop season. In the case of long crops, long duration crops, for 1 long crop season, you will classify it as NPA, and that is it for CA inter-level. Whatever practical examples you do, you get a CA final level, because in inter-CA exam, you are being asked questions like this only. Yes, Ganesh, I made a mistake. I'll repeat that again. I made a mistake. I'll show you that again. It's 0.25 or 0.40. I'll keep coming that again. So this is a question. Ramjilal and company had been allotted the branch audit of a nationalized bank. This is a question from CA Inter exam. It is November 19 question. Ramjilal and company had been allotted the branch audit of a nationalized bank for the year ended 31st March 2018. In the audit planning, the partner of Ramjilal and company observed that the allotted branches are predominantly based in rural areas. गाँव में है, rural based branches, and major advances are for agriculture purpose. All agriculture related advances. Now he needs your assistance on the following points as to incorporate them in the audit plan. What is that? For determination of NPA norms for agriculture advances, and for accounts where there is erosion in the value of security frauds committed by the borrowers. 5 marks question. We have done this and this. These 2 slides as it is, you have to write it in your answers and you are sorted. 5 marks. Sorted. Nothing more than that. Right? The last was agricultural advances affected by natural calamities. RBI has issued a master policy. You just need to know that. A master circular where it states that in case of an agriculture being affected by natural calamities in some areas, the banks will devise a policy on how to recover money from those areas and what other relaxations you have to provide to those farmers in those areas. So that's enough for agricultural advances by natural calamities. Depends upon bank to bank. Okay? So the last topic for today is drawing par. Drawing par in case of CC accounts, it is generally assessed as DP. Sanctioned drawing par is generally assessed as DP is an important concept for cash credit facility availed from banks and financial institutions. Drawing par is the limit up to which a firm or company can withdraw from the working capital limit sanctioned. You have been sanctioned 60 lakhs, but you can withdraw only up to 55 lakhs. The sanction limit is the total exposure that a bank can take on a particular client for facilities like cash credit overdraft. On the other hand, drawing par refers to the amount calculated based on primary security less margin on a particular. I'll show you how drawing par is calculated. Right? Yes, Ganesh, I'm coming to that. All accounts should be kept within both drawing par and the sanction limit all the times. The accounts which exceed the sanction limit of drawing par are otherwise irregular should be brought to the notice of management. Bank has duty to ask the customer to furnish the stock statements on a periodic basis, usually 3 months. During bank audit, if you are looking at a cash credit account, if you are going through a cash credit account, you are going through its physical file and you find that the last stock audit statement received from the customer is more than 3 months old, you classify it as NPA. You say this account is out of order. The least the max you can wait is for 3 months. After 3 months, you have to furnish a fresh stock statement to the bank. If the stock statement is older more than 3 months, you classify it as NPA. Right away. No other question. So auditor would take that stock statement, he should compare it with the audited balance sheet, the closing stock at year end, and he should ask for the deviations if the deviations are too much. Right? No, Ganesh, hypothecation is not a hypothecation. There is an erosion. Ganesh, I cannot understand your question. Please reframe it. Stock audit. Every bank as per RBI has to carry out, has to get its client stock audit done. The bank gets the stock audit carried out by a chartered accountant. The bank arranges for the stock audit of its clients because RBI has asked them that if you are giving a funded exposure of more than rupees 5 crore to any client, get their stock audits done at periodic intervals. So that you are able to know that there is no mala fide intention by the borrower or authentic records are being furnished to you as per the value of the stock is concerned. See the computation of DP. How do the banks calculate DP? You take stocks, whatever stocks are there present with the shopkeeper, with the business or in his factory, godown or shop, you calculate his net realizable value. In this case, it is 1000 crores, right? Less unpaid stock. You deduct from it the creditors because for that stock you have not paid. That stock is not yours. It still has got a liability attached to it in the form of creditors. So whatever sundry creditors are there, creditors are against stock only. You have to deduct that because if you are not able to pay that creditors will decline on your stock. So you will deduct the value of sundry creditors. Any letter of credit or bills accepted by you, you will deduct them. Then you will get whatever you have paid for stocks. You are true owner of only 400 crores. Out of 1000 crores, 300 crores are on credit. 300 against 300 you have issued accepted bills. So that is 400. Now you take margin out of 400 for market. The market is, but say the market is not that certain. The stocks may lose value, the stocks may gain value. So you are on the conservative side, you deduct 25%. That 25% is margin, you deduct that. Going to uncertainty in the market, you realize that you have only 300 crores of the value available to you in the form of stock. Now, CC limit can be sanctioned against only stock, only debit debts or both stock and book debt. In this case, if it was against only stock, it was 300. But in this case, it has been sanctioned against stock and book debts as well. So total debtors we have 1000 crores. Ineligible debtors 200. That debt for something provision have been made. So 800 debtors are there which can fulfill our requirement. We can realize money from 800 crores. Again, margin of 40% over here. So 480 total value of debtors available to us. 480, if it had been against debtors only, the drawing par would have been 480. If it had been against stock only, the drawing par would have been 300. Now it is against stock as well as debtors, the drawing par is 780. So you can understand if the bank had sanctioned limit of 1000 crores, 900 crores, 800 crores, whatever it be, the borrower could draw at this particular moment of time after this stock statement DP calculated till next stock statement is furnished after 3 months. For those 3 months, the borrower can enjoy only 780 lakhs out of those 1000 crores. Only 780 crores. So that is his drawing power. This is how drawing power is calculated and this is one of the main concerns while doing a bank audit. Concluding, now we conclude the audit of advances. It is here, how do you audit advances? This is one of the main questions. We have come long way. We have discussed all about advances. Now this is the 5-minute work. How do you audit the advances? In carrying out the audit of advances, the auditor has to obtain evidences about certain assertions. Evidences about certain assertions by performing substantive procedures as well as evaluation of internal controls. So auditor has to obtain evidences about amounts included in balance sheet, vouching verification, that is the best method to obtain evidences. Advances represent amount due to the bank. Amount due to the bank are appropriately supported by loan documents. There are no unrecorded advances. The stated basis of valuation is appropriate. The security stock valuation methods the bank is using are appropriate. Advances are disclosed and classified as per recognized criteria. Appropriate provisions are made. Accounting standards and accounting principles are being properly applied. So this is one question over here in audit of advances. What for you want advances? The auditor wants to obtain evidence with respect to which assertions? Then substantive procedure. What substantive procedure does the auditor carry out? The auditor carries substantive procedures to obtain audit evidence. So vouching and verification basically examine the validity of the recorded documents, whether the document furnished to the bank is it not time barred. So I'll tell you an example, like I tell you about stock audit statement. The stock statement. So after 3 months it becomes time barred. And in the case of furnished security, if a person has not visited the bank for 3 years, he is just using the facility and properly using. After 3 years under the Limitation Act, there is a Limitation Act in India under 3 years. After 3 years, the bank either visits them or calls them to the bank for a fresh agreement to be furnished. In the case of agricultural advances, this limit is 5 years. In the case of other advances, this limit is 3 years. They call the borrower to the bank or visit him at his home and get a fresh agreement signed that he is alive, he or she is alive. If a person has died on the death of that particular person, the account is right away classified as NPA because that person is no more. Even if his legal heirs take up the responsibility, even then, you cannot recover anything from a dead person. The account has become NPA. The legal heirs may settle the account in full and get it closed. Right? They can settle it, and even if they want to use the loan, they have to first settle it by paying the full amount and they can get a new loan in their name. But if a person dies, khatam. NPA. The last question, evaluation of internal control. Evaluation of internal control. So this is a question which has been asked n number of times during the past years in your inter exams. The most important question from this chapter, the auditor should examine the efficacy of various internal controls over advances to determine the nature, timing and extent of substantive procedures. Nature, what kind of substantive procedures should he resort to? What time should he perform those procedures and what level should he perform those procedures? कैसे, कब और किस हद तक ये substantive procedures उसको करने हैं. So he should examine their efficacy. How? So this is the answer. You have done it in your internal controls chapter. It is similar to that. I just wanted to make sure that you have this question with you. The answer is there with you in the PPT. You can learn it from there, and this is there in your internal control chapters as well. Right? So, as of today, we'll conclude it over here. We are done with the audit of advances. In the next class, we have to start with special audits. But the starting half an hour will do the profit and loss of bank. Just 15 minutes work. Right? The balance sheet and the profit and loss. Just 15 to 20 minutes work. And I'll download your doubts as well from the last class as well as today's class. In that half hour, we'll complete our bank audit chapter. We'll do 2 to 3 extra questions for exam purpose. And then we'll start. I'll resolve your doubts, answer to your queries. And then we'll proceed with our next chapter, audit of special entities, chapter 13. Right? So if any of you has any doubts left, I'll be downloading the question after 5 to 10 minutes. Please leave it over here before going. Right? Before disconnecting, do leave your doubts over here so that I can take them up all at one time during the next class. Fine? So whatever doubts are left, the difference between overdraft and cash credit, and other common doubts, whatever be the doubts from the whole chapter of bank audit till now, I'll be taking them up in the next class. That is on Wednesday, 26th, right? Okay, so I'll be downloading after 10 minutes, and we are still not over with this chapter, so don't feel that any of your doubts will remain unresolved. I'll resolve them in half an hour during the next class. Be assured of that, be informed of that. We have just left with 15 minutes of this chapter, that is it. The most important part of this chapter was the advances. And I hope I am able to do justice with that. Doubts would always be there. And it is good to have doubts. Doubts would always be there. Don't feel like if your doubts are unresolved, you are not able to grasp the concept. If you are able to grasp even 70 to 80% also, then it's completely fine. The rest 10 to 20% I'll make you understand in the next class. But the most important, the heart and soul of the bank audit topic has been completed today. Right? Thank you for your patient hearing. Now I'll be downloading the doubts after 5 to 10 minutes. Right? And resolving them in next class. Okay? Bye bye. Take care.